Alright, now take a look at this chart. This chart is the same chart we just talked about, but with some of the tools that I teach in my program here. Okay, now on this chart it's plain to see in hindsight that the trend was down, but just remember in my program I give you exact criteria to show you exactly when and where that trend either is up or down, and at this particular price point right here we knew that the trend was down right there. And on one of my entries that I teach in my program, you'd have actually been short on the aggressive, what I like to call the aggressive entry right in here. You would have been short, okay? And my conservative entry to that entry was right up in this level, okay? Now this level right here, once that low was put in place and the market started up off that low, we knew exactly when and where to enter the market, okay? And as you can see, once you enter the market, for all intents and purposes, the trade is over, because I explicitly show you where to exit the market. Okay, where and when to take profits, where and when to trail up your stops so you can milk more of the move. And this particular chart is just it just shows you everything that I teach, and it just makes perfect sense. But first and foremost, price action is everything. That's why what I do is I cover the charts without any indicators whatsoever, because you really can trade with the chart with nothing on it. I like to call it plain vanilla trading, pure price. And once again, I know a lot of these charts that you're seeing is pure price bars, and I know a lot of you may use candlestick charting. Just remember, if you use candlestick charting and that's what you prefer, that's fine. You're going to get the same end result using candlestick charts as if the same as if you use just pure price. The reason I use pure price, the price bars, is because that's what I learned from and that's what I've always used. But please remember, candlestick charting will work just as well. Alright, let's take a look at this chart. This chart, in hindsight, is pretty much a range trading market, right? With pretty much equal highs and equal lows here at the bottom. Okay? But if you look here at the left of your chart coming down, when the market came down, remember what I said earlier, and this is very important? Sideways markets are born from trending markets, and trending markets are born from sideways markets. So this sideways market was born from a trending market. The market was in a downtrend. Market came down. When it hit this bottom right in here, okay, the context and setup of the market was bearish. At that particular point, it was bearish. So according to what I teach, the entry would have been selling the market right in here. And I'll tell you right now, two of the three profit objectives I teach would have been achieved right in here, okay, before the market came up. Okay, as you can see, the market rallied up in here, tested this high, this high, tested this high, right? So now, and then the market failed, couldn't break through it, so the market started coming down. At this particular point, we're saying to ourselves, hey, the market's entering into a trading range. But based on very select criteria in my course, I do teach counter trend strategies. Counter trend means counter trend. So if the market's trending or in a trading range, we go against it. So right in here, we got a price pattern, a confirming price pattern to look to go long the market. And that obviously would have been a profitable trade. That took the market to the upper range of this trading range. Okay? Alright, but I want to make another important point here, okay? I know that so far in this presentation I've shown, nice uptrending markets, nice downtrending markets, and some range trading markets. And that's fine and dandy. That's, I wanted to drive home some points here. But again, I would say out of a 20 to 22 trading days of the month, there's probably 2 to 3 days, trading days in a month where the market trends nicely. The other days, for the most part, are back and fill type days. The market could be up 6-7 points, down. So it's kind of range trading, but with large enough swings for you to catch those intraday trends. So even though I showed you nice trending overall days, there's usually 2 to 3 trends during the day, up, down, up, in which you can take advantage of all those moves. And so that's what I teach in the course. So I not only teach you how to trade the small little intraday trends, but how to counter trend the market too. So it doesn't matter if the market's trending up, down, or even moving sideways. I give you the specific tools for you to profit from each one of those scenarios. Alright, look at this last chart here. This chart is the same as what we just looked at, but with none of the indicators. Okay? Now, basically, price action is everything, and that's why I've chosen to include a lot of charts with just price with none of the tools that I teach. But if you look at some of the tools I teach here, it just gives you some visual confirmation of what we spoke about on the last chart. But another real important thing that I want to get clear here, okay? I mean, I've been trading the market since 1988, and I've taught thousands of traders on how to trade since 1994, and I have to honestly and truly tell you that most traders really don't have a clue on what they're looking at. You really need that map. You need the map to show you and navigate you how to read those markets. It's as if, trying to get from, let's say, Michigan to California without a road map. You're not going to be able to get there without explicit instructions on how to get there. What my program will show you exactly what to do is how to read the charts like a newspaper, so you know exactly when and where to enter the market, exactly when and where a trend begins, when it ends, exact criteria that changes the trend from up to down, and when and where to enter that downtrend, exactly when a downtrend changes from down to up, and exactly how to enter that market, where to get out. Everything is spelled out for you from A to Z. Look at my lifetime mentoring program is a blueprint to get where you want to be in your trading. Now remember, everyone makes money here and there in the market, but most people give it back. So consistency is very important. And what my trading method will help give you is that consistency that you need to build that equity, so it's consistently moving to a higher level without giving it all back like most people try to do. Alright, let's do a quick review of the 4-step sequence to all successful trades. So get a pen and write this down if you want. Number 1, determining the context of the market. 2, determining a valid trade setup. 3, entering the trade. And number 4, managing the trade. Alright, now that we've just covered the 4-step sequence to successful trades, let's do a quick review of the 4 C's of trading, which is the foundation of your trading success. First, you need confidence. Confidence stems from having a method that gives you an edge in trading. This edge allows you to place trades with the expectation that in due time you will win. Remember, there is no substitute for confidence. Second, you need control. When I say control, I'm referring to the ability to execute and manage your trades according to the rules and guidelines of your trading method. You can have the greatest method in the world, but if you don't have the control to execute it according to the plan, you will fail. Our third C of success in trading is consistency. This is the ultimate goal of every trader, and it is the natural byproduct of confidence and control. Finding winning trades isn't the difficult part. The hard part is doing it over and over again on a consistent basis. Develop consistency in your trading and you can make fabulous returns. The fourth C stands for cash flow. This may not seem like a principle per se, but once again we've put it in this list because we need to differentiate between the concept of buy and hold investing versus what we teach in our program, which is generating cash flow from the markets on a daily basis. So, once again, the 4 C's are: 1 is confidence, 2 is control, 3 is consistency, and 4 cash flow, which are the building blocks to any successful trading business. The hallmark of every successful trader is that they treat trading as a business. Again though, I want to emphasize that you don't have to be a slave to your computer and charts. There are certain times during the day where the market becomes very predictable. I teach you exactly what these times are and how to successfully trade them. These times only consist of 2 to 3 hours a day, which means you don't need to be glued to your computer, and you'll be able to earn daily income and still have a life. True success means making money from your endeavors while having the time and freedom to enjoy it.